Hey everyone, welcome back to the QQQ vs QLD Challenge channel. It's Thursday evening, July 3rd, 2025. If you've been following this channel, you know that every month we invest $100 each into QQQ and QLD and share what we're learning about the market, performance, and long-term strategies. Have you watched my short YouTube video titled Nasdaq, Is 2025 Repeating the 2018 Crash and Rally? Published on May 25, 2025? It was published after QQQ hit $509. Since May 25, 2025, QQQ has gained more than 9%. In the short video, I described the similarity of Nasdaq's crash and rally pattern between 2018 and 2025. As described in the short video, the Golden Cross finally formed on June 23, 2025. If you haven't watched the short video, please check it out. Since April 9, 2025, we've witnessed a historic market comeback. Over the past 3 months, QQQ has been on a dramatic roller coaster. For the first time since March 2023, when the Golden Cross formation occurred, QQQ fell decisively below its 200-day simple moving average, the green line. Historically, this SMA 200 green line has served as a major support level during long-term uptrends. In the past 2 years, QQQ approached this line twice before, once in October 2023 and again in August 2024. Each time, it bounced off quickly and resumed its climb. But this time was different. This time, QQQ broke through the SMA 200 green line. In early April, the Nasdaq officially entered bear market territory, falling about 25% from its recent highs. This 2025 correction was very similar to the 2018 correction. QQQ experienced similar drawdowns in both 2018 and 2025, with declines of about 25%. However, the death cross to Golden Cross duration was much shorter in 2025. In 2018, the duration was about 4 months between the death cross, December 3, 2018, and Golden Cross, April 2, 2019. In 2025, the duration was about 2.5 months between the death cross, April 11, 2025, and Golden Cross, June 23, 2025. The recovery in 2025 was notably faster than in 2018. In 2025, the VIX, a measure of expected market volatility, has averaged around 21.4, which is higher than the long-term average and above the 2018 level of about 18.5. The shorter duration between moving average crossovers, death cross to Golden Cross, in 2025 suggests that price trends are reversing more quickly. This aligns with the higher average volatility, as markets with greater volatility tend to experience sharper and faster price swings. The market's rapid recovery in 2025, despite similar drawdowns to 2018, indicates that market cycles, downturns and recoveries, are occurring more quickly. Factors contributing to this include 1. Increased algorithmic and high-frequency trading, 2. Faster dissemination of news and economic data, and 3. Heightened sensitivity to macroeconomic events, such as tariffs, inflation. After forming the Golden Cross, QQQ hit all-time highs 3 times this week. QQQ is currently priced at $556, which is 3% above the previous all-time high of $540 from February 19, 2025. The U.S. stock market's rise in the last 2 weeks leading up to July 3, 2025, was driven by a combination of easing economic and trade fears, strong seasonal trends, improved liquidity, lower volatility, robust performance from technology stocks, and increased participation from retail investors. These factors combined to create a powerful rally, pushing major indexes like the S&P 500 and Nasdaq to new record highs. Recent reports indicate that the S&P 500 and Nasdaq closed at record highs for the 3rd time this week, fueled by strong investor optimism following a better-than-expected U.S. jobs report. Non-farm payrolls rose by 147,000 in June, surpassing forecasts, while the unemployment rate fell to 4.1%, easing fears of an economic slowdown. This robust labor data led investors to scale back expectations for an imminent Federal Reserve rate cut, causing Treasury yields to rise. Stocks across technology, consumer, and financial sectors led the rally. Historically, July has been a strong month for the S&P 500 index, with an average return of 3.4% over the past decade, second only to November. Notably, the S&P 500's 20.5% 2-month gain through June 9, 2025, is a rare event that has historically led to further gains, on average, 16% over the next 6 months and 31% over the following year. While history points to continued strength in July and beyond, the impact of tariffs remains a significant risk factor for the market's performance. Now let's move on to the QQQ versus QLD $100 Challenge Portfolio Update. As of today, QQQ is trading at $556, much higher than last month's level of $530. Since the beginning of the challenge, we've invested a total of $4,000 into QQQ. Our current unrealized gain is approximately $680, which represents a 17% return. For comparison, last month's return was about 12%, with a paper gain of $450. It's encouraging to see this kind of progress. Our average cost per share for QQQ is $474.66. On July 1st, I added 0.18 shares at a price of $548. We continue to invest monthly without trying to time the market. For QLD, things are looking even better. We've also invested a total of $4,000 into QLD. As of now, our unrealized gain is about $980, giving us a return of approximately 24%. The average cost per share is $95.67. On July 1st, shortly after purchasing QQQ, I bought 0.86 shares of QLD at $116. These results reflect the leveraged nature of QLD, which is designed to deliver 2 times the daily performance of the Nasdaq 100 index. While leverage increases volatility, it also provides greater upside potential when the market recovers, as we've seen this past month. Since May 2024, we've been investing at least $100 into QQQ and $100 into QLD every single month without fail. This consistent, disciplined strategy is called dollar cost averaging, or DCA. The goal is to reduce the impact of short-term market fluctuations by spreading our investments out over time. By doing this, we buy more shares when prices are low and fewer shares when prices are high, all while maintaining a long-term focus. Our approach is simple: we invest monthly. We hold long-term. We avoid selling. And we never use margin or leverage beyond what's already built into products like QLD. This strategy is designed to be low-risk, sustainable, and emotionally manageable, especially during periods of market turbulence. If you're curious about the data behind this strategy, I recommend checking out my 2 deep dive videos. One is titled Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, the 30-year showdown. The other is Cash vs. QQQ vs. QLD vs. TQQQ. These videos explain how long-term investing and monthly contributions can outperform more complex strategies over time. That wraps up our July 2025 update for the QQQ vs. QLD challenge. If you found this video helpful, be sure to like, subscribe, and leave a comment. And just a quick reminder, this video is for entertainment purposes only. I am not a financial advisor. Please make sure that your investing decisions match your personal financial goals and risk tolerance. Thank you so much for watching. I'll see you in the next update. Until then, stay focused, stay consistent, and happy investing.